Hello friends, this is Amit. Here's my NGO, Finlight Foundation, sole motto being to create a wave of financial literacy amongst public at large. We take seminar sessions across the organizations free of charge. Apart from that, we are starting this YouTube series with the sole motto of making people financial literate enough so that they can handle their finance under the mantra called as do it yourself DIY. Why? Additionally, the reason being, of course, financial planning concepts are very much universal in nature. So any citizen of any country can use these concepts. And the third and the most important reason being, no country can have economic sustained development or growth unless and until its middle class families are financially independent. Yeah, whatever views and opinions we are giving, you can treat them to be very much unbiased. The reason being, neither me, neither my NGO, neither my company are associated to any financial product selling company. Okay. Now, whatever tips and tricks we are giving, those are very much generalized in nature. A bit of a customization may be required considering your family. Yes, the whole topic is still being importance of financial planning in an individual's life, dissected into various segments. This was the earlier topic of my earlier video, why I need insurance planning. In this particular video, we are catching up on with this topic. Now, this topic is into 3 series. So, today we are covering with part 1 of the series, part 1 of part 3 of total part 3. What is investment planning? Once we have saved enough money for emergencies, very important. So, let me catch up on this. How can we grow our wealth? Investment refers to a commitment of funds to one or more assets that will be held over some future period of time. Now, for some future period means till your financial goal. Now, there was this point, emergency. A thumb rule, of course. 2 to 3 months of your saving, 2 to 3 months of your expenditure, EMI and so on should be kept aside in some kind of an emergency fund or emergency liquid fund or saving account. The reason being, some contingency may come up in your life that will be taken through those emergency fund without affecting your routine financial planning discipline. Now, very important aspect, the most important aspect of the whole investment planning is setting out your goals. Please do check my earlier videos. Destination based financial planning is all about what we are learning. So first, you can check my earlier videos where I've shown some calculations of how to draft a goal, how to define a goal. Now, our investment product mainly should depend upon broadly 3 criteria. 1, our financial goals listed by us. 2, time horizon of the goals. 3rd being our risk appetite. Considering these 3 main factors, there are many other factors. What we need to, based on the diagnosis, this is the diagnosis, we need to buy the medicine. As I mentioned earlier, what people are doing, nothing of this kind, directly going in the market and buying the medicine, some medical representative approaching us to buy the financial product. That is, medical representative means some kind of an, can't name. Okay. What are the investment vehicles, investment tools available? Equities, direct or through mutual funds. Real estate, too costly for a common man. Gold, either in physical form or paper form. Debt mutual funds. Bonds, post office and public provident funds. Banks and non-banking finance companies, deposits, that is FDs. Or becoming self-employed and investing in yourself. The most important aspect, whenever we are going in for goal-based planning, we need to have such investment product which is beating inflation. Now, what does that mean? So, mathematically, let's take this example. Let's say we are investing in bank FD. Again, I am repeating myself. I am not promoting any financial product. But let's say currently the FDs are somewhere around at the rate of 7.5%. And we are in the tax bracket of 20%. So, by earning 7.5%, we are paying tax on it 20%. So, net post-tax savings are, post-tax revenue is 6%. Currently, particularly in India, the inflation is 8%. Please ignore the government's inflation rates. Families' inflation rates are different. Am I generating wealth for my family? No, I am losing wealth. Forget about my goals. I'm not achieving my goals. Rather, my buying power of money in my pocket and my investment, that is also losing by 2% per annum. So what you need to do is select or search those products whose rate of return is beating or greater than inflation. Then only your goals will be achieved. Yeah, I'm not sure because of the background being white whether the presentation will be captured by my video. It's a very interesting presentation I have made. There's a patient over here. He's approaching a doctor. Doctor gives him the service. So doctor giving service to the patient. Patient asks for the fees. Doctor says either doctor may charge a very negligible amount or may say it's free. Reason being what? Doctor is being compensated by some pathological lab or some pharma company. Okay. So would you like to go to this kind of a doctor who is charging you no fees or zero fees? That is not making any sense. Let's take this example. Again, this is happening in, see, this is just for analogy purpose. Okay. I am not a doctor or neither I am into medical profession. Now instead of doctor, it's somebody else, some can't name, and these are us, the family. And the analogy can be applied. Now let's take this example. This is again what happening. Now let's say this is a medical example, how it works. This particular doctor calls the patient, hey, try this new medicine. It's being introduced first time in the market by Moon Pharma. Okay. Arey, he didn't even diagnose me and just gave me the medicine. Chalo, theek hai, let me try it. Ho ke kya hoga? And just imagine, this is what we are doing, not about medical field. This is what we are doing in our personal finance. Some new kind of a product, either an IPO or NFO is coming with no track record and it is being sold out to us. I will prefer to buy that medicine which is tried and tested. Na? I am not a guinea pig. Okay. So, again, I am not against sub NFO or IPO. But yeah, we need to be very much clear about the product. Just because some new product is coming in the market does not mean I have to buy it. I need to buy the product considering my goals of the family. That is what the whole crux of this learning is. Yeah, please do subscribe to my YouTube channel. Yeah, this is part 1 of my video of the investment planning. Watch out for my next part. And please hit the bell shape icon and also enable the YouTube notification in your smartphone to watch the same videos on your smartphone also. And happy financial planning, and do watch out for my subsequent videos. Thank you so much.